Turn on the recording. Okay. Well, good morning, everyone. My name is Kelly Bennett. I am the Marketing and Event Manager at the Birmingham Bloomfield Chamber. Welcome to our webinar about the CARES Act. Chamber staff members Cheryl Geralds and Samantha Michalak are both on with us this morning. Thank you to everyone for joining us and for your support during this time. I would like to mention a couple of plugs, if you will, for the Chamber before we get started. We do have more webinars coming soon. Next week, we have retail practices for reopening, or best practices that Robert Gibbs, he's an expert in that area, will be conducting. So if you know a retail manager or owner, please invite them to that. We'd love to have, I know a lot of people have a lot of questions about how to reopen safely. So that would be a really good resource. And then the following week, we're doing a philanthropy webinar. We're still working out the details. But if you are involved in a nonprofit, and I know everyone is hurting during this time, particularly our nonprofits. So we're working on that, and stay tuned for information. Also, we have opened up our exclusive member e-blast. We're doing one on Mondays now because we had such a long waiting list. So I have that available if anyone is interested in sending out an email to your fellow chamber members to promote any services or deals or specials that you have. We can do that. So it's completely open. Contact me for information. What else do I have? Oh, we have a virtual coffee break next week. If you have not participated in one of those, they're a lot of fun. They're informal chat sessions that we can talk about any questions that you have. Chamber President Joe Bowman usually picks a topic to focus on, and we'll narrow that down this week. So that will be exciting as well. We have a lot going on, even though we're all working remotely, and we are still here to serve our members. So please keep us in mind if you need anything during this time. We're here to help, and if we can't help you, we can certainly point you in the right direction or get you connected to people who can. With that, I would like to say if you have any questions during today's webinar, you can feel free to post them in the chat box. And also, we will have some time for Q&A at the conclusion of the webinar. So I think that's everything I had to mention. I would like to turn everything over to Vince Gotko. He's on the Chamber Board of Directors and is an expert in his field at Fenner, Melstrom Dooling. Thank you for your support, Vince, and for joining us this morning. So if you want to go ahead and turn on your screen sharing, and maybe give us a little background on yourself, and we can get started.
Sure. I think I'll pause on sharing the screen until a little bit later. You covered a little bit of what I was going to do. I was actually going to start with a little bit of plug for the Chamber in general, and thank the Chamber for the opportunity to present, as well as kind of tout the fact that the Chamber really kind of frames itself as a chamber of action. And I think it's, through this crisis, it's done a great job of demonstrating its commitment to its members by continuing to host these webinars on a weekly basis. I know last week there was Chief Financial Credit Union participated and did a presentation on some marketing, and Clark Hill has also participated through their HR arm. And been really informative. Actually, our head HR admin in our office has attended a couple of those seminars from Clark Hill and has said that they have been really beneficial and informative to her. As Kelly mentioned, I do participate on the executive committee and on the board of directors for the Chamber. Our firm has been members of the Chamber for 11 years. Since we moved into town here. And I guess I'll just move into a little bit about our firm. For those of you who are not familiar with our firm, we are a firm of about 30 people, and we are located right in downtown Birmingham on the corner of Brown and Old South Woodward. Our focus is on entrepreneurial clients with closely held businesses. And that has led us into various areas of businesses and consulting. We don't specialize in and focus on hospitals or municipalities, non-for-profits. We're all about for-profit work. We bring a lot of strategic analysis to our clients, a lot of experience. We have a lot of direct partner involvement in clients and our business clients and their businesses, and help them consult. And we are connected through an international association of accountants called Integra International. And that allows us to provide a connection to similar sized companies as ours, CPA firms throughout the world, for people that are doing business internationally. So I will go ahead and share my screen here, and you'll see I've had a couple of slides set up. Oh, I want to share. Why don't I see the screen I want to share now?
There we go.
There we go. Okay, so as I mentioned, we're located right in Birmingham, and we are connected with Integra International. So today we're going to focus on the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act. This act was passed on March 27th, and it was passed with a high degree of intention, but with a very, very short on instruction and implementation. So it's been really fun during our most busy time of the year to try and interpret some of the provisions of this act and what Congress intended and how it was best going to operate for our clients. And it was a multifaceted act. As you can see here, we're going to cover today a few of the individual provisions that were included in the act that impacted individual taxpayers. We'll cover some business tax provisions that were included in the act. And then we'll talk about the Paycheck Protection Loan Program. I really don't want to simply read off the tax law. I tried to get bullet points, and I wanted to keep this more of a kind of an overview or a 20,000 foot look down at some of the provisions in the law. I think code talk is boring. I try to not be that person who spouts code sections back to clients or other individuals. I really want it to be understandable and in effect teach the law or the code to my clients. So each of the topics is presented in kind of a summary form. There were a lot of rules and regulations behind definitions that are involved in the act. And I'll try to point a few of those out, but if you're interested or you need to look at any of these provisions, you can certainly look them up on the IRS website, kind of drill down, excuse me, a little bit further on these. And I wanted to kind of keep it somewhat brief. When we get down to the Paycheck Protection Loan Program section, I have that section kind of outlined in more of a kind of open question format. So I listed a bunch of open questions, which I will attempt to answer as best I can. It's a moving target still, unfortunately, which has made it even more difficult to consult. We get new FAQs and explanations coming out of the SBA on what their intentions are and how they feel that they're going to implement this loan and loan forgiveness options. So we'll go through that. Q&As, there's not a lot of people on the Zoom meeting today. So if there were more, I would say don't ask questions or use the chat box to pose a question. But since we don't have too many people on the meeting today, I think it would be okay if you wanted to kind of someone interrupt and ask a question, I'll certainly do my best to answer it. That way we can kind of keep the flow through the presentation, not have to go back and maybe cover topics different or again. Then we'll come back at the end, have any final questions and answers. And then I've jotted down just a few parting thoughts in light of the current situation that I thought might be worth maybe just having some discussion on or tossing out there, seeing how other people are dealing with things. Okay, so let's move forward. I've got each of these going between two screens. So I've got each of these topics kind of laid out. So first we'll deal with the individual provisions of the Act, and certainly the most publicized section of the Act that involved individuals was the potential for the $1,200 rebate. So as you'll see throughout this presentation and the provisions of this Act, I think Congress and the legislators knew that there was going to be a significant disruption in the economy as a result of the coronavirus. And they knew that the best way to try and deal with it was to somewhat try to keep employees intact at their business, and we'll get to that more on the payroll, Paycheck Protection Program, loan program, but also to get money into the hands of people that were going to be directly impacted by the economic shutdown. So this was an attempt by Congress to get money immediately out to taxpayers. So again, long on intention, short on implementation, right? They announced the program to get the $1,200 out to people based on their 2018 tax return filings. And they started issuing checks. Well, unfortunately, people died, people moved. So checks were going to addresses for people who were not there. People that died got refunds. So again, good intention, clunky execution, right? I think some of that has been smoothed out. And as you can see at the bottom here, the IRS has provided a, get my payment tool website address if you still haven't received your tax refund and want to have it redirected or find out what its status is. But in general, they wanted to get $1,200 rebate out to eligible taxpayers and that had also to eligible children that were dependents of the taxpayer. So these payments are not intended to be income and they're not intended to be taxable. They were just money that the IRS and the government wanted to get to the taxpayers. So some people may have been affected by the phase out for receiving the refund based on their adjusted gross income. I've outlined those there on the slide, and you can see where the phase outs are for different filing thresholds. So if you didn't get a refund, it's possible that you've phased out. If you're not in those phase out range and you're expecting a refund, again, you might want to go to the IRS, get my payment tool to find out where your refund is at. As I mentioned, refunds went to deceased taxpayers. My aunt, who died at the beginning of 2018, but did file a 2018 tax return, actually received a refund. And initially there was no mechanism to return the money, right? The IRS didn't have anything in place to have people send that money back to them. They have since developed a website and have some information on how to get that back. You can seek that information out if you inadvertently received a payment. So the idea of the payment here, our second to last bullet point, the payment it's really an advanced credit that taxpayers are receiving on their 2020 tax return. So the payments are going to reduce what would otherwise be your eligible credit. Depending on where your AGI is in 2020, even if you phased out of that, the ability to receive a refund, it's not going to be taxable. So there were people that had lower income in 2018, or maybe even in 2019, that are going to file their returns, are going to get this credit. In 2020, their AGI may be limiting what they would normally get as far as the credit, but there are no refund provisions for that. So 2018, 2019 were really the predicator on whether you were going to get the refund. And a lot of people who had increase in income from 18 to 19, we advised them to wait to file their return if there was a possibility that they would phase out, and that way they would be able to avail themselves of this recovery rebate for the individuals. And the next individual topic is special use of retirement funds. As part of the act, the IRS also is allowing people to take up to $100,000 out of their retirement accounts. You know, I think that is kind of a last resort for people. Certainly you want to try and keep as much money in your retirement accounts as possible, but for some people could certainly be a necessary option. So you could draw money out of eligible retirement plans, including IRAs. 401k accounts are also included, 403b, 403a accounts, and tax shelter 457b plans. Those plans are for government employees, so that's the difference between like a 401k plan and some of those other plans that are alluded to. The distributions are needed to have taken after the passage of the act, which was March 27th and before December 31st of 2020. Taxpayer can elect to include the taxable income on their tax return over a 3-year period, or they have the ability to refund the money to the plan over the 3-year period as well. So in order to be eligible to receive the distribution from the plan, it must be made to an individual. You have to be diagnosed with COVID or SARS, have a spouse or a dependent that's diagnosed, or the large basket, right? Experience adverse financial consequences. Okay, so I think almost everybody in the United States could say that they have experienced adverse financial consequences as a result of the pandemic. But in general, you need to have been quarantined, furloughed, lay off, have reduced work hours, or other factors as to be determined by the Treasury. So as you can see, they've left themselves an out for possible additions and or subtractions from the ability to be able to take these distributions. Another individual provision is 2020 waiver of required minimum distributions. If you've reached 70 and a half, you are required to take required minimum distributions from your IRA or defined benefit retirement accounts. That is not the case for 2020. So this could be a good thing for taxpayers who don't necessarily need the money. They, especially in light of the fact that the market has come down, right? So the amount of your required minimum distribution is based on the fair market value of your accounts as of December 31st of the preceding year. So to look at where the market is now compared to where it was at the end of December, with the large decrease, you would really not want to pull the money out. So they're giving people the option to leave that money in for probably a rebound, which certainly already seems to be happening in the market if you've seen the past couple of days returns on the market. So that's available. And then they made a couple of small changes to charitable contribution deduction rules. So beginning in 2019, it allows individuals to take a $300 deduction for charitable contributions in computing their adjusted gross income. This is going to help a significant amount of taxpayers. Part of the Tax Cuts and Jobs Act that was passed at the end of 2017 increased the standard deduction for many individuals to the point where they were not really able to benefit from itemizing their deductions. A lot of taxpayers that were making charitable contributions, therefore, are not itemizing and not really getting the tax benefit for those contributions. So $300 seems small. It's something, right? Something's better than nothing. And then lastly, it suspends for 2020 the percentage limitation on being able to deduct contributions. So the general limitation was that I could only deduct contributions to the extent of 50% of my adjusted gross income. So in a basic example, if I had $70,000 of AGI and I made a $100,000 contribution to my church, the most that I could deduct in that year would be limited to $35,000 or 50% of my adjusted gross income. The remaining amount of my contributions would be available for carryover to next year and then subjected to the same limitation in the next year. However, that limitation has been suspended. So sky's the limit for making charitable contributions this year. If you want to make charitable contributions, this is the year to do it, especially if you're in a situation where you're already itemizing your deductions. Anybody have any questions on these individual provisions at all before we proceed to some of the business provisions? Awesome. I'm doing a better job than I thought.
Yeah, I agree.
All right.
And really,
So next we'll slide down here. My cursor.
Keep in mind our
There it is.
way we're organized administratively.
So now we're cover some of the business provisions. I apologize. I kind of smashed my bullet points together here on this page to try and get all my credits, these 3 credits on one page. So we'll go through some of these credits. The employee retention credit was part of the CARES Act.
Plus 18.5.
The other two credits on here, the credit for paid sick leave and the credit for family leave, were part of a separate act that was passed just before the CARES Act. And we'll go through some of those provisions. So as part of the CARES Act, there are 3 credits that as part of the legislation, there are 3 credits that employees are able to avail themselves of. And they basically provide a refund or a credit against Social Security taxes that would normally be due, and withholding taxes that would normally be due when filing the quarterly 941 form or withholding reporting form for the IRS. So the employee retention credit provides a refundable credit to eligible employers, right, of up to 50% of qualified wages to employees who are not working due to employer's full or partial shutdown under orders from a governmental authority or significant decline in gross receipts. Okay, so this is why I love my job. This sentence has 4 or 5 definable terms in it that you need to go find out what the definition is, right? So we have an eligible employer, qualified wages, significant decline, right? So we've got what are all of those things and how do they all work, right? So again, these were things that were implemented, and then we had to wait for guidance and some follow-up on to find out what those definitions would be or how Congress wanted them to be defined. So under the employee retention credit, there's a credit available for wages paid between March 12th of 2020 and before January of 2021, right? So there's your qualified wages, right? So if you're paying wages, including healthcare, to eligible employees, you would qualify for the credit as long as those wages were paid during this time period. The credit is a refundable credit, and you can apply for it when, as I mentioned, when you file your 941 form. The maximum wage and benefit, and therefore the credit, is limited to $10,000 in aggregate per employee for all quarters that you're infected. So you can see here that the credit is very large. And again, the intention of the act, especially the CARES Act, was to keep people employed. And it was really it's very large hurdle for employers to get over the fact that I need to keep people employed even though I might not have work. And that is really prevalent when we get to the Paycheck Protection Program. But here you have a situation where I'm paying people who are not working or are impacted by COVID, and I can get a credit for paying those wages, but I might be in a situation from a business standpoint where I can't even keep employees around. And we've, part of the congressional acts that they passed was also an extension of the amount of benefits that unemployed people were able to get. They threw everybody an extra $600 a week kicker on top of their unemployment. And that is making it difficult to get people off of unemployment now. There are, that you're talking about people that were making potentially less than $50,000 a year in their jobs that are now making the equivalent of close to $50,000 a year just by being unemployed. So for an employer to spend money to keep an employee on payroll, maybe be able to avail themselves of the credit, is difficult if the employee would be better off on unemployment. Further down, one of the defining bullet points there, a significant decline in gross receipts. Significant decline begins with the first quarter in 2020 for which your gross receipts are less than 50% of the same quarter for 2019. So you would look at the first quarter of 2020 compared to the first quarter of 2019. If my gross receipts are down 50% or more, I've got a significant decrease in my wages, and I would be able to qualify for this credit. How long can I do that? Well, I qualify as long as my gross receipts remain below 80% of the gross receipts for the same quarter in 2019. So if I go below 50, I qualify, and then I check each quarter. And once I exceed 80% of gross receipts for the same quarter in 2019, I'm kicked off of credit eligibility. The two credits that were not included in the CARES Act, but were included in a Paid Sick Leave and Family Leave Act just before the CARES Act was issued, are the credit for paid sick leave and the credit for paid family leave. So employers with fewer than 500 employees are allowed a credit against the employer's portion of Social Security, again, for each quarter. 100% of the qualified leave wages paid for the calendar quarter under the 100% of the qualified wages can be the credit, and the qualified wages are limited to, on a per day, per employee basis for sick pay, and it can range from $200 a day to a $2,000 aggregate or 10 days of coverage to $511 per day to $5,110 of aggregate coverage. Whether you're subject to the $200 wage limit or the $500 wage limit depends on generally a direct COVID impact versus an an indirect COVID impact. So if I've been tested positive, I've been quarantined, or I've been diagnosed as having COVID, I would be eligible for a $500 per day sick leave, and for up to 10 days. And if I were taking care of somebody, or I had to stay home because my child didn't have daycare, I would be subject to $200 per day of sick leave, and I could get up to 10 days, $2,000 of coverage if I'm the employer. I can benefit from that. So these wages, you cannot double dip these wages for purposes of the Paycheck Protection Program, which we'll get to in a minute. So if you're paying people under this provision, you can't use those wages as part of your qualifying wages and payroll costs for the Paycheck Protection Program. Credit for family leave, very similar to the paid sick leave. However, the Family Leave Act covers a significant longer period of time, 50 days of family leave. So you can see I can get up to $200 per day per employee and up to $10,000 of aggregate wages per employee for 10 weeks. And again, I can't double dip those wages. Any questions on these credits at all? Great. I noticed, I've talked to a couple of payroll providers, Paychecks, Heartland, whatever the case, ADP. They are really on top of these credits. I believe they're, if you're paying somebody sick leave, they are calculating the credits and letting you know that they're on top of it. But what you have to watch out for, again, is where you're at on your Paycheck Protection Program, right? If you really want to use those wages as your job costs, you can't take the credit. So it's really a dollar for dollar trade-off. I'm either going to get the credit or I'm going to get the loan forgiveness on the Paycheck Protection Loan Program. So if you feel that your wages are going to be adequate on the Paycheck Protection Loan Program side, and you're going to satisfy the requirements, which we'll talk about shortly over there, then you might be able to continue to get the credit and get the Paycheck Protection Loan Purpose, our Paycheck Protection Program loan forgiveness. Another business provision was a delay in the payment of employer payroll taxes. Yeah, let me scroll down. My cursor keeps getting lost. Excuse me. There it is. So we've got delayed payment of employer payroll taxes. The Act allows for the deferment of payroll taxes, including self-employment tax. So if you're self-employed, you can defer payment of your self-employment taxes under the same provisions as employers can. So it allows for taxes due between March 27th, 2020 and ending before December 31st of 2020 to be deferred. Again, payroll companies should be on top of this. Self-employed people will probably have to dig in a little bit more on this to figure out exactly what they can defer, but it applies to the employer portion of the Social Security tax. So you're certainly required to remit what you withheld from the employee, but the employer portion of the Social Security can be deferred. And if you're a self-employed person, 50% of your self-employment tax can be deferred, because effectively you're paying the employer's portion and the employee's portion since you are self-employed, and they will allow you to defer your employer portion of that as well. So you can defer one half of that tax is going to become due on March 31st of 2021, and the second half will be due on December 31st of 2022. And again, this provision is not available if you're have PPP loan forgiveness. The wording here was a little unusual for me. When I read this, it said not available if you have PPP loan deferral. I found that to be contradictory. I wasn't sure exactly what they meant. So I believe that there's just a cross wording problem on the reference that I used. And I believe that they mean loan forgiveness, but it could mean in effect having availed yourself of the PPP loan program at all. So beware there, beware on that issue. Lastly, the last business provision that I've got to talk about is, besides the PPP stuff, is the modification for net operating losses. So the Taxpayer Job Cuts Act that was passed in 2017 eliminated an available 2-year carryback for net operating losses and mandated that they only be carried forward. And in addition to that, those losses were able to be carried forward on a limited basis. You could only use each year up to 80% of your income to be offset by a carry forward of a net operating loss. So with the passage of the CARES Act, any net operating loss that is arising in a tax year beginning after 2017 and before January 1st of 2021 can be carried back 5 years unless the carryback period is waived, right? It's at the discretion of the taxpayer as to whether or not they want to carry it back. You can always carry it forward. The rules that limited, as I mentioned, the rules that limited the NOL deduction in the tax years beginning after December 31st of 2017 are suspended in tax years beginning after 2017 and before December 31st of 2021. The 80% limitation will now begin to apply on NOLs arising in tax years beginning after 2017 in the 2021 tax year. So any losses that are not carried back and utilized fully and then are carried forward past 2021 will then be subjected to the old limitation under the Tax Cut and Jobs Act of 2017. Okay. Any questions? All right. Also included in this packet, and what I'll do is I'll forward this slide deck that I've got over to Kelly. And if you would like a copy of this, you can contact Kelly. She can forward a copy to you. But I found this document, this COVID legislation summary somewhere, but I thought, I can't recall where, but I thought it really laid out some of the provisions that we've talked about so far in kind of a matrix form. So we talked about the paid sick leave program. You can see that it's got the description of the benefits, the terms and requirements there. Federal family leave pay we talked about. This includes some Michigan provisions that were also passed that we just don't have time to cover in this, this webinar, but they're here. You can go out and seek them out if you're interested. We have the Michigan Economic Development loans that were available, MEDC grants that were available, work share programs. The SBA also has disaster relief loan available for people. You can borrow money under this plan for working capital needs. You can't, again, double dip the payments across the PPP loans. So you got to watch out for there. We're going to talk about the payroll protection program, but that's briefly summarized on this matrix as well. So I've got that included in the slide deck. All right. So as I mentioned earlier, I want to try and take a very large overview look of the payroll protection, Paycheck Protection Program loans provisions of the CARES Act. you know, they really didn't do us any favors, as I mentioned. They were very long on intention, but very short on detail. There were a lot of definable terms, like we talked about before, definable terms that for which no definition or clarification was provided in the act. The SBA has, since passage of this act, issued 48, I believe it is now, frequently asked questions and answers that have arisen from the Paycheck Protection Loan Program. So we've been trying to deal with those, process those back into, you know, the information that was available at the time of the passage of this act. So there's more likely than not, now that we're kind of into the loan forgiveness phase, there's more likely than not going to be even more frequently asked questions issued that we'll just have to wait and process as they come out and advise our clients and follow up on with them. So I wasn't quite sure how to best present this Paycheck Protection Loan Program. So like I said, I pretty much just laid out a bunch of open questions here that I'm going to address. And again, if there's any other follow-up questions, if you've got questions about your own Paycheck Protection Loan Program circumstances, I'd be happy to try and entertain them. But just know that it's really a very unique situation for each individual taxpayer, and the provisions for repayment and loan forgiveness are predicated on, you know, payroll costs and other costs, and also full-time equivalent employees, which I'll talk about here. So as I mentioned, CARES Act was passed on March 27th. Included in there was an allocation of some funds for the Paycheck Protection Loan Program. Everybody knew that the funds were not going to be enough to cover the companies that were eligible and in need of the funds. So it was somewhat of a gold rush, right? The people with the best advisors and CPAs that were on top of things were pretty much out of the gate very quickly. We, unfortunately, this act sucked all the oxygen out of our tax season room. We pretty much dropped everything for 2 weeks and focused strictly on getting funding for our clients on this loan program. Banks were also thrown kind of in the middle of this. They had to administer the lending, the loans, made it difficult for them, again, because there wasn't a lot of guidance provided. Again, the idea was to get the money out there as quickly as possible and then kind of figure it out later. And that's really what's happening. Should it have really been called a loan? Probably not. They probably should have called it a Paycheck Protection Grant, right? Because really the government is affording people that are able to take advantage of it the ability to get loan forgiveness. So they're really getting a grant. And again, the intention was to keep people employed, right? That was the whole intention of this act. They wanted to, knowing that there was going to be a disruption, they wanted to try and keep workforces in place, provide funding to employers to get money to their employees. There are two avenues that they could have availed themselves, right? They could have used the unemployment offices, or they could use employers, right, to get money out to employees. So part of the Paycheck Protection Program concept was you needed to pay people their wages. And a lot of employers found it difficult to get over the hump that they might be paying employees to do absolutely nothing, even if it were sitting at home, right? But the government wanted that to happen intentionally, I believe, because they did not want to overwhelm the unemployment offices with everybody being laid off and knowing that it was going to be somewhat of a short shutdown, however that's defined. We seem to be having some mission creep on that. But the short shutdown, when they finally got around to reopening the economy, they wanted people to be in place. They didn't want to have employers scrambling for employees. Where am I going to restock my employees from so I can start making my widgets again? So that was, that kind of covers, what was the intention of the program. How much could be borrowed and who could apply. So, eligible borrowers could get up to $10 million, and it was predicated on 2.5 times your average monthly wages that you paid in 2019. So a pretty sizable amount could be borrowed. And again, not a lot of restrictions. Less than 500 employees, some limitations on not-for-profit entities, but other than that, you could pretty much apply for up to a $10 million loan. So certainly people were interested in that. Liquidity was and continues to be very critical for a lot of the small to medium-sized businesses that we service. They're not out of the woods yet. There's no such thing as a vertical launch on a ramp up for production. Even if we opened up the doors tomorrow for everybody and everybody went back to work, it's still going to take some amount of time to ramp up production, ramp up activity, and get everything back going. How did you apply? The loan application was a 2-page application. I don't know if everybody looked at it, but very basic. I've never seen anything like a 2-page loan request document for up to $10 million of available funds. Again, long on intention, short on implementation. The idea was to get the money out there as quickly as possible and then backfill it. There was a lot of publicity and a lot of consternation about whether people should have taken the money. The caveat was current economic uncertainty, right? And I think almost everybody on the planet had some amount of economic uncertainty associated with it. SBA then later expanded that to say you had no other sources of borrowing or funding. But for the most part, if you borrowed the money and you're using the funds for the intended purpose of paying payroll and other qualified expenses, then you're going to probably be okay. Wow, I knew time was going to fly. Generally, I'm going to just bounce around a little bit. So generally, how the loan forgiveness calculation works. I'll give you a simple example. Let's say I'm a taxpayer. I was able to borrow, or a borrower. I was able to borrow $120,000 on the PPP program. And for the next 8 weeks of time, I've got to incur payroll costs and other qualified expenses. And as long as I spend that money, and 75% of those costs are allocated toward my payroll, I can get forgiveness. And if I also maintain an equivalent amount of employees based on certain measurement periods. So let's say I borrowed $120,000, and through my 8-week period, I've only been able to spend $100,000 of those funds. So right off the get-go, $20,000 of the funds that I borrowed would not be available to be forgiven. I would then take those eligible costs that I spent, the remaining $100,000, and I would multiply that by a full-time equivalent ratio quotient based on generally the full-time equivalent employees I had before the COVID crisis to the full-time equivalent employees that I have during my 8-week period. And then I may have to apply that ratio as a reduction to that amount. So if I've only have an 80% full-time equivalent quotient, another 20% of the eligible costs that I spend would not be forgiven. So I would have borrowed $120,000 worth of funds, and only $80,000 of those funds would have been forgiven. 20 because I didn't meet the full-time equivalent ratio requirement, and then 20 because I just didn't spend the money. These calculations can be very in-depth. We as a firm are very much on top of the full-time equivalent question with our clients. There seem to be a number of provisions that will allow taxpayers to elect the best possible calculation at arriving at the quotient. There also is a provision that you will not be subjected to the reduction quotient if you're able to restore your full-time equivalent employees by June 30th of 2020. Skipping down because I can see I'm running out of time here. When must I apply for forgiveness? Well, you're going to calculate your eligible forgiveness based on your 8-week covered period, which is the amount of money that you spend within the 8 weeks after you receive your funding. But you're likely, as a result of the full-time equivalent testing, not going to be able to apply for forgiveness until some point after June 30th of 2020, if you are able to, again, restore your full-time equivalent employees by that date, and then eliminate the need to reduce your requirements. So over the weekend, we came up with this PPP loan forgiveness checklist. I'm certainly not gonna read this out loud and go through it. You can review it on your own time. But it basically is a little bit of a walkthrough as to the process and some of the documentation and decision points that are available. You know, so that it's a couple of pages long, but you can see that it's pretty detailed. So I guess any questions right now on anything? I know I've really covered a lot of ground in a big hurry. Due to the time constraints, probably could have easily spent a couple hours on a few of these topics. So I tried to jam in a lot based on the CARES Act. There's a lot there. There's things there that I still did not have time to cover. Any questions? Okay, I've got some parting thoughts here. I won't take too long, but I think one of the things that is important, and I can kind of turn you all into apostles on this, and you can go preach this good word to business owners and your clients. And it becomes very evident in times of crisis, such as this, like the COVID and the disruption that took place, that business owners and individuals, if you're a business owner, you really need to have a solid relationship with your professional advisory staff. Bankers were deputized to administer these loans. They certainly were going to take care of clients that were their clients first. And then, the provisions of the loan, you could go to any institution, but the institution could take care of those clients. Having a good CPA that's out in front of these issues, capable of digesting this. I work at a firm of, like I mentioned, 20 people. We have a couple of people in our firm that were dedicated to this. I certainly couldn't have bitten off this elephant and chewed it all up at one time. We had other people, eat that elephant in bites and make it a little bit easier to digest and basically come up with, for example, this Paycheck protection loan forgiveness schedule. Certainly, I can see we're at the time, but certainly things are going to change from a business working environment. People need to be adaptable. You need to, you need to adapt or die, right? We're in a situation where there's a significant amount of disruption. It can be beneficial. You can't lament on the hardships, focus on the positives, and try to move forward from there. Lean on your professional advisors, lean on your bankers. We're at the forefront of it. We're trying to keep up as best we can. And lastly, what I'll say is I'll scroll back up to the top here, my slide deck. Again, here's our website. If you go to our website, right at the top of our website, there's a COVID banner. All of our commentary and press releases, so to speak, and blog posts have been connected there. You can click on that, and you can drill down into some topical COVID conversation. So that's all I have today. It was a little daunted. I told Kelly earlier that it was going to be an hour-long presentation. I'm usually not comfortable enough to feel I can be thrown on for an hour about these topics and try to make it as interesting as possible. I'm not even going to say entertaining.
Well, thank you so much, Vince, for joining us today. You certainly presented a lot of information, and I know sometimes questions regarding these topics can be personal, so we'll make sure everyone has your contact information, so if they do have questions that they want to ask offline, we'll make sure everyone has that. So
that'd be great. Like I said, Kelly, if you don't mind, I'll forward the slide deck to you. If anybody requests it at a later date or views this webinar at a later date, they can contact the BBCC and they're able to have it. And again, I'd just like to say, I know we didn't have a humongous amount of people on the Zoom call today, but just know that this is a benefit to chamber members that is provided. It's not only me that is trying to share their talents along the way. You have many people that are willing to participate in these webinars and really try to, share their knowledge and their capabilities with other members of the chamber. So people should continue to take advantage of their membership opportunities and avail themselves of these webinars as much as they can.
thank you so much, Vince. With that, I'd like to remind everyone that we did record the session, so it will be available for later viewing, and we'll email that out to everyone, and we will share it on our website. So thank you all for attending today. If there are no further questions, we'll go ahead and wrap up. I know it is a couple minutes past noon, so I hope everyone has a great afternoon, and thank you all for joining us.
Thank you. Thank you, Vince.
Thank you. Kelly, can you stay on?
Oh yeah, absolutely.
Thanks.
All right.
Bye.
Bye.
Kelly, I just wanted to know